Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. Let us continue. This is lecture number 12. This is lecture number 5. This is illustration number 5. We'll be continuing with sinking fund method. We have already done few cases. We have already done few examples of sinking fund method. Now let us do this illustration. On 1st April 2013, Z Limited purchased a lease of property for 10 lakhs. The lease would contain on 31st March 2016, Z Limited decided to set up a sinking fund. The sinking fund was to be credited or to be debited with an annual contribution from profit, the interest on the investment, and any profits or losses made in the realization of the sinking fund investment. The sinking fund was to be represented by a specific investment, and any sums made available to the sinking fund were to be immediately invested. And any sums made available to the sinking fund were to be immediately invested except at the termination of the fund, that is at the last year. The investment in sinking fund is not required in the last year. We have seen the cases. During the 3 years following transaction took place, 2014, 2015 and 2016. 2014, 31st March, a contribution from profit of 3,20,000 were to be made, and this sum was reinvested. This sum was invested. 13 October 2014, investment which originally cost 1,10,000 were sold for 1,20,000, and the proceeds of sale were reinvested. In 2015, 31st March, a contribution from profits of 3,20,000 was made. Interest on investment of 16,000 was received, and these amounts too were reinvested. Again in 2015, 9th August, investment which originally costed 2,10,000 were sold at a profit of 20,000, and proceeds of sale were reinvested again. In 2016, that is third year, 31st March, interest on investment rupee 48,000 was received, which was not invested. All existing investments were sold for 6,60,000. A contribution from profit of an amount required to make up the sinking fund to 10 lakhs was made, and this amount was not reinvested. I believe it is clear. I believe it is clear to you. Okay. Required, prepare sinking fund and sinking fund investment account for the year 2013 and 14, 2014 and 15, and 2015 and 16. Prepare sinking fund and sinking fund investment account for these 3 years, 13, 14, 14, 15, 15, 16. Let us try to solve this. Solution. 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 We need to prepare sinking fund account and sinking fund investment account. We need to prepare sinking fund account and sinking fund investment account. We'll begin with sinking fund account. Sinking fund, sinking fund account. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount in rupee. Date, particulars, amount in rupee. 31st March 2014, a contribution of 3,20,000 was made and this sum was invested. Just write the date in the year 2014. In the year 2014, 31st March, 31st March 2014, to balance carried down. To balance carried down 3,20,000. 3,20,000. 3,20,000. And over here 31st March by depreciation, by depreciation account 3,20,000. This is given in the question. So the total over here is 3,20,000. This is transferred over here in the credits, in the debit side, 3,20,000, and closing figure of 3,20,000 came. In the year 2015, in the year 2015, 1st April 2015, 1st April 2014, 1st April 2014, by balance brought down, 3,20,000 from debit side to credit side, by balance brought down 3,20,000. Let us stretch these lines a bit. Let us stretch these lines. So 1st April 2014, the balance brought down is 3,20,000. Then see over here on 13th of October 2014, investment which originally costed 1,10,000 were sold for 1,20,000 and the proceeds of sale were reinvested. Simultaneously, a contribution from profits of 3,20,000 was made and interest on investment, that is 16,000, was received and it's also reinvested. So over here October 13, by sinking fund investment account 10,000, the difference between 1,10,000 and 1,20,000. So invested 10,000, profit is made, interest on investment is 16,000, so by interest on sinking fund investment 16,000 March 31st, and then a contribution of profit that is 3,20,000. This is the depreciation. A contribution of profit that is 3,20,000 March 31st by depreciation. Contribution of profit by depreciation account 3,20,000. 3,20,000. 3,20,000. Let us do the totals. 3,20,000 plus 10,000 plus 16,000 plus 3,20,000. On your calculators, 3,20,000 plus 16,000 plus 10,000 plus 3,20,000. 6,66,000. 6,66,000. 6,66,000. 6,66,000 to balance carried down. To balance carried down 6,66,000 March 31st, 2015. I believe you understood till here. Let us continue now. Let us continue, stretch these lines. 6,66,000 balance brought down by balance brought down by balance brought down 1st April 2015. 1st April 2015. Now on 9th August, the investment which was originally costed 2,10,000 was sold at a profit of 20,000 and reinvested. So reinvestment, sinking fund investment, sinking fund investment, sinking fund investment account 20,000, 20,000 on 9 August. On 9 August. On 31st March 2016, interest on investment is 48,000. Interest on investment is 48,000. 31st March 2016, interest on investment. So by interest on sinking fund investment, by interest on sinking fund investment, sinking fund investment account 48,000. 48,000. I believe you understood till here. A contribution from profit of an amount required to make up the sinking fund 10 lakh was made, and this amount is not invested. Obviously, this amount is not invested at last. All existing investment were sold for 6,60,000. Okay. So we have to record the profit or loss on sale. We have to record profit or loss on sale. We'll do one thing. We make sinking fund investment account first, and then we will close this account, which is sinking fund account. So let's make sinking fund investment account first. Just leave some lines and make sinking fund investment account. Sinking fund investment account. Sinking fund investment account. The format would be same. Date, particulars, amount, date, particulars, amount, date, particulars, amount, date, particulars, amount, debit, credit, sinking fund investment. So in the first year, that is 2014, the investment is made, that is 3,20,000, that is of depreciation amount. An investment is made, that is of 3 lakh, that is of depreciation amount, to bank account 3,20,000. This is of 2014. 31st March 2014, to bank account 3,20,000, 3,20,000, 3,20,000 balance carried down. 31st March, by balance carried down, 3,20,000. This 3,20,000 will be to balance brought down, 1st April 2014, 1st April 2014, 3,20,000. Stretch these lines. 3,20,000. The second year, there is a profit on sale of investment, that is of 10,000. So we need to record that, and it is sold at 1,20,000. The investment is sold for 1,20,000. So we will record to bank account 1,20,000, to bank account 1,20,000, investment of sale proceeds, investment on sale proceeds 1,20,000, investment on sale proceeds 1,20,000 over here, and record over here on October 13, 2014, by bank, that is sale of investment, by bank, sale of investment, which is 1,20,000, which is 1,20,000. Clear? The profit is 10,000, because the investment of 1,10,000 is sold for 1,20,000. So October 13, October, to sinking fund account, to sinking fund account 10,000, to sinking fund account 10,000. Now on the last date, that is March 31st, March 2015, to bank account, we need to invest the depreciation amount and the interest amount. So just write investment of depreciation. Depreciation amount is 3,20,000. Depreciation amount, which is 3,20,000, and interest amount, which is 16,000. So 3,20,000 plus 16,000 is 3,36,000. 3,36,000. Stretch these lines. 3,36,000. Let us do the totals. 3,20,000 plus 1,20,000 plus 10,000 plus 3,36,000. Total is 7,86,000. 7,86,000 minus 1,20,000. Minus 1,20,000. Balancing figure 666,000. Buy balance carried down. Buy balance carried down. 31st March 31st March 2015. Buy balance carried down. Third year. Opening balance will be 666,000. To balance brought down. To balance brought down 666,000. 1st April. 1st April 2015. To balance brought down 666,000. Let us go to the question back. In the third year, what has happened? An investment which cost 2,10,000 sold at a profit of 20,000. So we need to record this sale of 2,10,000 plus 20, 2,30,000 of sale, and then we have to record the profit of 20,000. So record over here. Buy bank sale recorded. Sale 2,30,000. 2,10,000 plus 20,000 profit. This profit is to be recorded here, 20,000, to sinking fund account, to sinking fund account, profit on sale. Profit on sale 20,000. The date is 9 August. The date is 9th August. 9th August 20,000. This 2,30,000 needs to be invested back. So to bank account, investment of sale proceeds, 2,30,000 on 9th of August, 2,30,000 on 9th of August. So opening balance was 666,000. There was a sale of 2,30,000 inclusive of profit. Profit is transferred to sinking fund, and then this whole is invested. That is the depreciation amount plus interest is invested. This is depreciation amount plus interest. Depreciation amount plus interest amount. This is invested back. Make a total quickly. Total 666,000 plus 20,000 plus 2,30,000, 9,16,000. 9,16,000 on the credit side, minus 2,30,000, minus 2,30,000. Go to the question. All existing investment were sold for 6,60,000. So we need to sell all existing investment. This is the last year. Sell all existing investment. So buy bank account 6,60,000. Sale of all existing investment. Sale of all existing investments, 6,60,000, 6,60,000, 9,16,000 minus 6,60,000 minus 2,30,000. The balancing figure is 26,000. This is the loss by sinking fund account, by sinking fund account, loss on sale. We have sold everything. We have incurred a loss of 26,000. 2016, 31st March. 2016, 31st March. Is it clear? Now this loss to be transferred to sinking fund account, loss to be transferred here to sinking fund account, 26,000 on the debit side, 2016 March 31st to sinking fund investment account, to sinking fund investment account, 26,000. The lease is over here. So lease amount 10 lakhs will be transferred over here to lease account, 10 lakhs to lease account, 10 lakhs. Now do the totals quickly. 10 lakh plus 26,000. 10 lakh 26,000. 10 lakh 26,000 minus 6 lakh 66,000 minus 20,000 minus 48,000. So balancing figure is 2 lakh 92,000. This is the balancing figure. This is nothing but the depreciation amount by depreciation account. By depreciation account, balancing figure. Last date 31st March 2016. So we have completed the sinking fund account with the help of sinking fund investment account. I believe you must have understood till here. Let us continue with illustration 6 now. On the basis of data given in illustration 5, required prepare lease account and depreciation account for the year 1st April 2013 to 31st March 2016. Prepare lease account and depreciation account for the year 1st April 2013 to 31st March 2016. Quickly do one thing. Kindly refer the whole question once again. On 1st April 2013, Z Limited purchased a lease property for 10 lakhs. The lease would expire on 31st March 2016. Z Limited decided to set up a sinking fund. The sinking fund was to be credited or debited with an annual contribution from profit, the interest on the investment, and any profits or losses made on the realization of the sinking fund investment account. The sinking fund was to be represented by specific investment, and any sums made available to the sinking fund were to be immediately invested except at the termination of the fund. During the 3 years of following transaction took place. 2014, 31st March, a contribution from profits of 3,20,000 were made and this sum was reinvested. On 13th October 2014, Investment which were originally costed 1,10,000 were sold for 1,20,000, and the sale and the proceeds of sale were reinvested again. On 31st March 2015, a contribution from profits of 3,20,000 was made, and interest on investment of 16,000 was received, and these amounts were reinvested. On 9th August 2015, investment which originally costed 2,10,000 were sold at a profit of 20,000, and proceeds of sale were reinvested. On 31st March 2016, interest on investments 48,000 were received, which was not invested. All existing investments were sold for 6,60,000. A contribution from profit of an amount required to make up the sinking fund to 10 lakhs was made, and this amount was not invested. We need to prepare lease account and depreciation account. So let us prepare lease account quickly. Lease account, lease account, right, solution, solution, lease account, lease account, date, particulars, amount, date, particulars, amount, date, particulars, amount, date, particulars, amount, debit, credit, 2013 1st April. First of all, lease to bank 10 lakhs, lease to bank 10 lakhs first year. The total says 10 lakhs over here would be transferred to the credit side, 10 lakhs, and the balancing figure, that is by balance carried down. By balance carried down 10 lakhs. 31st of March 2014. 31st of March 2014. In 2014, in 2014, 1st April, 1st April 2014, to balance brought down, to balance brought down 10 lakhs, to balance brought down, this amount will come here 10 lakhs, the closing value will be 10 lakhs, and over here on the credit side, this 10 lakhs is transferred, this 10 lakh is transferred on the credit side, which is 10 lakhs, 2015 March 31st, 31st March 2015, by balance carried down, by balance carried down, that is the closing balance will come over here as 10 lakhs. Let us stretch these lines a bit, because we need to do the accounting for third year also. We need to do the accounting for third year also. Transfer these 10 lakhs, transfer these 10 lakhs to over here, to balance, to balance brought down, to balance brought down. The date is 1st April. So the date is 1st April, to balance brought down 10 lakhs, and on the last date, that is 31st of March, 31st of March 2016, It is invested in the sinking fund, transferred. So by sinking fund account, by sinking fund account, 10 lakhs. The total over here is 10 lakhs. The total over here is 10 lakhs, and on the credit side, the total will be 10 lakhs. I believe you understood. So over here in 2016 March 31st March 2016, it won't be by balance carried down because it is relieved now. So by sinking fund account, the entry would be sinking fund account debited to lease account. Sinking fund account debited and lease account will be credited with the amount 10 lakhs. I believe you are clear. Now we need to make depreciation account. Now we need to make depreciation account. Depreciation account. So quickly make depreciation account. Depreciation account. Depreciation account. Let us make depreciation account now. Date, particulars, amount, date, particulars, amount, debit and credit, debit and credit, date, particulars, particulars, amount in rupees, amount in rupees, date, particulars, and amount in rupees, and amount in rupees. First of all, we'll do it for year 2014. 2014 March 31st March, to sinking fund, to sinking fund, 3,20,000, 3,20,000. This 3,20,000 will be transferred to profit and loss account. So on the credit side, let us do the totals. 3,20,000. This 3,20,000 will be transferred to profit and loss account. So 31st March, by profit and loss account, by profit and loss account, 3,20,000. Year 2015, year 2015, 31st March, year 2015, 31st March, to sinking fund account, to sinking fund account, 3,20,000, to sinking fund account, 3,20,000, 3,20,000, transfer 3,20,000 on the credit side, 3,20,000 on the credit side, by profit and loss account, by profit and loss account on 31st March, on 31st March, by profit and loss account. Now in the year 2016, let us do the accounting for the year 2016 now. In the year 2016, 31st March, 31st March, to sinking fund account, to sinking fund account, to sinking fund account, 2,92,000, to sinking fund account, 2,92,000. Let us do the totals. 2,92,000, 2,92,000, So 2,92,000 will be transferred to by profit and loss account, by profit and loss account 31st March. 31st March by profit and loss account 2,92,000. Let us continue. Let us continue with the next method, and that is machine hour method. Machine hour method. Let's begin. So, where it is practicable to keep a record of actual running hours of each machine, depreciation may be calculated on the basis of hours that the concerned machine worked. The machine hour rate of the depreciation is calculated after estimating the total number of hours that machine would work during its whole life. However, it may have to be varied from time to time on a consideration of a changes in the economic and technological conditions which might take place to ensure that the amount provided for depreciation corresponds to that considers appropriate in the changed circumstances. It would be observed that the method is only a slight variation of straight line method under which depreciation is calculated every year. Under this method, it is calculated for each hour of machine works. Each hour of machine works. Schedule 2 of the Companies Act 2013 prescribes estimated useful life of different assets for companies, also recognizes this method to some extent. It prescribes that the depreciation should be charged using estimated useful life suggested in it. However, in certain category of plant and machinery, it prescribes to charge higher amount of depreciation in these assets are used for 2 shifts or 3 shifts. In a way, Schedule 2 combines straight line method and machine hour method both. Straight line method and machine hour method both. I believe you understood till here. I believe you must have understood till here the machine hour method. Let us write an example on the basis of machine hour method. Example. Let us write an example on the basis of machine hour method. Write cost of machine. Cost of machine is 10 lakhs. Useful life. Useful life of machine is 10,000 hours. Useful life of machines is 10,000 hours. Scrap value. Scrap value of machines is 20,000 hours. Scrap value of machines is 20,000 hours. Calculate depreciation for calculate depreciation for first year. Calculate depreciation for first year if it is if it is run for if it is run for 3,000 hours. If it is run for 3,000 hours in first year. So we need to calculate depreciation on the basis of its usage or the estimated machine hour, basically the used. Continue. Just write over here solution. Solution. Do along with me. Depreciation. Depreciation equals cost minus scrap value. Cost minus scrap value divided by cost minus scrap value divided by total estimated machine hour life. Total estimated machine hour life multiplied by current current year current year machine hour that is used basically. current year machine hour that is used. So cost is given over here, which is 1 lakh. Cost is given over here, which is 1 lakh. Scrap value is 20,000. So 1 lakh minus 20,000. The total estimated machine hour is 10,000. The total estimated machine hour is 10,000 multiplied by the current year machine hour usage, which is 3,000. Current year machine hour usage, which is 3,000 hours, which is 3,000 hours over here. Let us quickly calculate the value of depreciation. Let us quickly calculate the amount of depreciation. So 1 lakh minus 20,000 is 80,000, is 80,000 divided by 10,000, divided by 10,000 multiplied by 3,000. So this would be cancelled over here. 8 would be there. 8 multiplied by 3 equals to 24,000. 24,000, this is the amount of depreciation. This is the amount of depreciation. This is the amount of depreciation, which is 24,000. I believe the machine hour method is clear to all of you. I believe the machine hour method is clear. Let us continue. Let us continue. Let's do illustration 7. Illustration 7 on the basis of machine hour. Let's do illustration 7 on the basis of machine hour. A machine was purchased for rupee 30 lakhs, having an estimated total working of 24,000. Having an estimated total working of 24,000 hour. The scrap value is expected to be rupee 2 lakh, and anticipated pattern of distribution of effective hours is given as follows. A machine was purchased for 30 lakh, estimated total working of 24,000 hour, scrap value is 2 lakh, and anticipated pattern is given over here. Year 1 to 3. From year 1 to year 3, 3,000 hour per year the machine will effectively work. From year 4 to 6, 2,600 hour per year. From year 7 to year 10, 7, 8, 9, 10, for 4 years, the machine will work for 1800 hour per year. Determine annual depreciation under machine hour method. Determine annual depreciation under machine hour method. So this is required. Quickly try to solve it. Right, solution. Solution. Statement of annual depreciation. Statement of annual depreciation. Statement of annual depreciation under machine hour rate method. Under machine hour rate method. Machine hour rate method. Quickly do it. Make this statement. Make this statement. First is year. So 2000, year is year 1 to year 3. Year 1 to year 3. We need to calculate annual depreciation. We need to calculate annual depreciation over here. Year 1 to year 3. So in year 1 to year 3, the usage is 3,000 hours. 3,000 hours divided by the total life, that is 24,000 hours, multiplied by original cost minus scrap value. So original cost is 30 lakhs. Original cost is 30 lakhs and scrap value is 2 lakh. So this is 28 lakhs. 28 lakhs multiplied by 3,000 divided by 24,000. Quickly do it. Quickly solve it. 3,000 divided by 24,000 multiplied by 28 lakhs. It is rupee 3,50,000. It is rupee 3,50,000. So the annual depreciation from first year to third year is 3,50,000. First year to third year is 3,50,000. From year 4 to year 6. From year 4 to year 6. 2,600 hours per year. So 2,600 hour per year divided by 24,000 divided by 24,000 multiplied by 30 lakhs multiplied by 30 lakhs. 30 lakhs is what? 30 lakhs is original cost minus 2 lakhs, that is depreciation, that is scrap value. Scrap value, so 30 minus 2 is 28. 2,600 divided by 24,000 multiplied by 28 lakhs, which is equal to which is equal to 303,333. 303,333. I believe you must have understood. I believe you must have understood till here. Let us quickly calculate for year 7 to year 10. 1800 per 1800 hours. Year 7 to year 10. 1800 divided by 24,000 multiplied by 30 lakhs minus scrap value, that is 2 lakhs. So 1800 divided by 2400, 1800 divided by 2400 minus 28 lakhs equals 2 lakh 10,000 equals 2 lakh 10,000. I believe it is clear. I believe it is clear. Okay. Just do some notings in relation to machine hour method. Let us do some notings in relation to machine hour method. Notings in relation to machine hour method. Let us quickly see the notes once again. So machine hour method is also known as service hour method. Machine hour method is also known as service hour method. Under this method, depreciation is provided by means of a fixed rate per hour calculated by dividing the value of asset by the estimated number of effective working hours during the useful life of the asset. This method is considered to be appropriate for costly plant and machinery. This method is considered to be appropriate for costly plant and machinery, aircraft, etc. Aircraft, etc. Let us continue. Let us continue. Right, how to calculate the amount of depreciation. How to calculate the amount of depreciation. Step 1. Step 1. Calculate the rate of depreciation. Calculate the rate of depreciation per hour. How you will calculate the rate of depreciation? Rate per hour equals rate per hour equals original cost less residual value, less residual value. Original cost less residual value divided by divided by useful life in terms of effective hours, useful life in terms of effective hours. I believe you understood till here. Step 2. Step 2. Calculate the amount of depreciation. Calculate the amount of depreciation. Depreciation depreciation as under amount of depreciation amount of depreciation equal to actual hours multiplied by rate of depreciation per hour multiplied by rate of depreciation per hour rate of depreciation per hour. I believe you understood this. Quickly write an illustration. Quickly write an illustration. 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 A Limited. A Limited purchased a machine. A Limited purchased a machine. A Limited purchased a machine for rupee 2,20,000 on 1st January on 1st January 2013 and incurred and incurred rupee 40,000 towards towards freight freight insurance towards freight insurance carriage inward and and installation charges it was it was estimated that it was estimated that it was estimated that the machinery will it was estimated that the machinery will have a scrap value of rupee 20,000 of rupee 20,000 at the end of its useful life at the end of its useful life which is which is which is 10 years of which is 10 years of 12,000 hours which is 12 years of 12,000 hours each 12,000 hours each. A Limited decided to depreciate A Limited decided to depreciate A Limited decided to depreciate the machines on machine hour on machine hour rate method on machine hour rate method. The machine hours the machine hours during first 6 years the machine hour during first 6 years first 6 years were as under, were as under. The machine hour for first 6 years were as under. Year, year 2013, 2014, 2015, 2016, 2017, and 2018. Machine hours, machine hours for 2013, 6,000 hours. For 2014, 8,000 hours. For 2015, 10,000 hours. For 2016, 14,000 hours. For 2017, 14,000 hours, and for 2018 it is 12,000 hours. It is 12,000 hours. I believe you understood. Show, show the machinery account. Show the machinery account. Show the machinery account from 1st January, from 1st January 2013 to 31st of December to 31st of December 2018 to 31st of December 2018. Is it clear? Let's try to solve it, but before solving it, let's see the illustration once again. A Limited purchased a machine for 2,20,000 on 1st January 2013 and incurred 40,000 towards freight insurance, carriage inward and installation charges. It was estimated that the machinery will have a scrap value of 20,000 at the end of the useful life, which is 10 years of 12,000 hours each. A Limited decided to depreciate the machines on machine hour rate method. The machine hours during first 6 years were as under. So year is given and show the machinery account from 1st January 2013 to 31st of December 2018. For all the 6 years we need to make machinery account. For all the 6 years we need to make machinery account. Let us begin. Let us begin. Right, solution. Right, solution. Before making the machine account, first write the working note. First make the working note. Calculation of rate of depreciation. Calculation of rate of depreciation per machine hour. Calculation of rate of depreciation per machine hour. Have you understood till here? Let us calculate machine hour rate. Let us calculate machine hour rate equals cost of acquisition, that is cost of purchase, cost of acquisition minus scrap value, that is residual value, divided by life of the asset, divided by life of the asset in hours, life of the assets in hours. Let us see the cost of acquisition. Cost of acquisition is 2,20,000. Cost of acquisition is 2,20,000 and 20,000 is the, and they have incurred 40,000 towards freight, insurance, carriage inward and installation, and the scrap value is 20,000, and the scrap value is 20,000. So cost of acquisition minus scrap value divided by life of the asset in hours. So cost of the asset is 2,20,000 plus 40,000 in the installation. So 2,60,000 minus scrap value is given in the question. 20,000 is the scrap value divided by the life of an asset in hours, that is 12,000 hours. 12,000 hours. Quickly solve it. 2,20,000 plus 40,000 minus 20,000 is 2,40,000 divided by 12,000 is 20. It is 20, but this is for 10 year. This is for 10 year. It is given in the question. Life which is 10 years of 12,000 hour. 12,000 is for 10 year. So actually it is 1,200. So divide by 10. Divide by 10 equals to 2 per hour. 2 per hour, or you can write rupees 2 per hour. Rupees 2 per hour. Let us make machinery account now. Let us make machinery account now for all the 6 years. Machinery account. Machinery account for all the 6 years. Draw the format of machinery account. Draw the format of machinery account. Date, particulars, amount, date, particulars, amount, date, particulars, amount, and date, particulars, amount. I believe it is clear. Let us continue. So, on 1st of January 2013, a machinery was acquired. So, two bank account acquisition of machinery for 2,20,000 and 40,000 incurred for the installation. So, two bank account, this needs to be capitalized. Two bank account 40,000 for installation charges. For installation charges. I believe you understood. Let us make the total. This is 2 lakhs 60,000. 2 lakhs 60,000. Depreciation on closing date 31st December 2013. We are following the accounting year. By depreciation. By depreciation. By depreciation. So let us see for 2013 the usage of machinery. 6,000 machine hours multiplied by rupee 2 machine hours. So 6,000 multiplied by 2 is 12,000. 6,000 multiplied by 2 is 12,000 over here. By balance carried down. By balance carried down 2,60,000 minus 12,000 is 2,48,000. 2,48,000. 2,48,000. 2,48,000 will come here as opening balance. To balance brought down. To balance brought down. 1st January 2014. To balance brought down. Closing date 31st March 2000 and 31st December 2014, as it is accounting year. By depreciation. By depreciation account. By depreciation account. Let us see the usage for 2014. It is 8,000 hours. It is 8,000 hours. So 8,000 multiplied by 2 per hour, 16,000. 8,000 multiplied by 2 per hour, 16,000. Let us stretch these lines. Quickly stretch these lines. Let us do the totals here. 2,48,000, 2,48,000 will be transferred to the credit side. 2,48,000 minus 16,000 is 2,32,000. By balance carried down. By balance carried down. 2,32,000 by balance carried down. 2,32,000 will come here as a opening balance. So two balance brought down. Two balance brought down 1st of January 2015. Third year, two balance brought down 1st of January 2015. 2,32,000. 2,32,000 on closing date 31st of December 2015. By depreciation, by depreciation account, just see the usage in hours. For 2015 it is 10,000 hours. For 2015 it is 10,000 hours. So 10,000 multiplied by 2, 20,000. 10,000 multiplied by 2, 20,000. By balance carried down. By balance carried down. 2,32,000 minus 20,000. 2,12,000. 2,12,000. This would be the closing balance. 2,12,000 would be the opening balance in 2016. 1st of January 2016. Two balance brought down. Two balance brought down 2,12,000. Two balance brought down 2,12,000. 2,12,000. 31st December 2016. 31st December 2016. Let us calculate the depreciation. So by depreciation account, 14,000 hours is the usage. So 14,000 multiplied by 2, 28,000. 14,000 multiplied by 2, 28,000. 2,12,000 minus 28,000. 2,12,000 minus 28,000. It is 1,84,000. It is 1,84,000 by balance. By balance carried down. By balance carried down. Let us continue. Let us continue. Let us stretch these lines a bit. Stretch these lines a bit. Stretch these lines. Let us do the accounting for 2017. So 1st of January 2017, two balance brought down. Two balance brought down 1,84,000. Two balance brought down 1,84,000. This will act as a closing over here 1,84,000 on year end 31st of March 2017. On 31st of March 2017, let us calculate the depreciation. By depreciation, the usage is 14,000 hours. The usage is 14,000 hours. So 14,000 multiplied by 2, rupee 2 per hour. 14,000 multiplied by rupee 2 per hour, which is 28,000. Which is 28,000. 1,84,000 minus 28,000. 1,84,000 minus 28,000. 1,84,000 minus 28,000. Do it on your calculators. By balance, by balance carried down. By balance carried down 1,56,000. By balance carried down 1,56,000 for 2017. Now do it for 2018. 1st of January 2018. 1st of January 2018. Two balance brought down. 1st of January 2018. Two balance brought down 1,56,000. 1,56,000. This brought down over here in 2018. Opening figure 1st of January 2018. Let us do the totals over here. 1,56,000 would be the totals. 1,56,000 would be the totals. Now the closing, so 31st December 2018. 31st December 2018. We need to calculate the depreciation. So by depreciation account, let us see the number of machine hours. The number of machine hour for 2018 is 12,000 hour. The number of machine hour is 12,000 hour. Let us calculate the depreciation according to 12,000 hours. So basically what we need to do is 12,000 hours should be multiplied by rupee 2 per hour. Should be multiplied by rupee 2 per hour. So the depreciation, so the amount of depreciation will be 24,000. 24,000. By depreciation, 12,000 multiplied by 2, 24,000. 12,000 multiplied by 2, which is 24,000. Just calculate the closing figure. By balance, this is by balance. Do the correction quickly. This is by balance carried down. By balance carried down. Do it on your calculator. 1,56,000 minus 24,000. 1,56,000 minus 24,000. 1,56,000 minus 24,000. 1,32,000. 1,32,000. By balance carried down 1,32,000. I believe you must have understood this. I believe you must have understood how we have calculated the machinery account and how we did the accounting for 6 long years. How we did the accounting for 6 years in machinery account using machine hour rate method. Using machine hour rate method. Let us quickly recap what we have done in today's class and then we'll wind up. Let us quickly recap. So we have solved a comprehensive sum on sinking fund method. On the basis of sinking fund method, we have prepared sinking fund account and sinking fund investment account. We have prepared sinking fund investment account. Then we have solved a sum which consists of lease account. We have made the lease account and also depreciation account. We have begun a new method in today's class, and that is machine hour rate method. Machine hour rate method. This method is used for heavy machines and aircrafts, ships, etc. We have solved an example and we have calculated the amount of depreciation. Then we have solved an illustration and calculated the depreciation for year 1 to year 3, year 4 to year 6 and year 7 to year 10. We have written some notes which is in relation to depreciation of machine hour rate method. We have seen how to calculate the amount and rate of depreciation using machine hour rate. And then we have written this illustration, this long illustration. Over here, you should understand that this 12,000 hours in machine hour rate, this 12,000 hour is for 10 years. So either you make it 1200 hour for a year or you divide it by 10 years later on. So it is rupee 2 per hour. It won't be rupee 20 per hour. It won't be rupee 20 per hour. It is rupee 2 per hour. I believe it is clear. And then we have made machinery account for 6 years and we have accounted for it properly. I believe you have understood this. I believe it is absolutely clear. Okay, so we are stopping here. We are stopping here. Thank you. Thank you.